silver to go from 70 to 100, that's not even that big a gain. I mean, it's already up more than double this year. And so I think $100 is a very realistic target for silver in 2026. It could end up being, quite a bit north of 100. I doubt we get all the way up to 200, but that's, certainly it's in the realm of possibility, but I don't want to forecast that. But I'm comfortable with a forecast of 100. And I think gold will at least go to 5,000. Right now it's, 4,300. So 5,000 at a minimum. But I think, if silver's at 100, gold could easily be at 6,000,
Mounting strains across the financial system are now being reflected more clearly in the precious metals market. Peter Schiff explains that silver's surge is not the result of a sudden speculative rush, but the delayed outcome of years of aggressive deficit spending and persistent monetary expansion. Governments and central banks have relied on continuous money creation to sustain spending, gradually weakening the purchasing power of currencies. Once silver finally broke through long-standing resistance levels, the market began to reprice it rapidly, revealing how far behind it had fallen relative to inflation, gold, and real-world costs. Peter Schiff sees the coming phase as one where silver's momentum continues to build rather than fade. Even after its sharp rise, he views further gains as realistic, with prices potentially moving toward the $100 level by 2026. From his perspective, this would not represent an extreme or euphoric outcome, but a natural progression given how quickly silver moved once key technical barriers were removed. Gold consolidating near historic highs while silver keeps advancing reinforces the idea that leadership within the precious metals complex is shifting, a pattern that has historically appeared during stronger stages of long-term bull markets. Peter Schiff also emphasizes that investor psychology is only beginning to change, which could add fuel to the next advance. For years, retail participation in gold and silver remained muted as attention was diverted toward alternative assets promising faster returns. As that narrative weakens and precious metals demonstrate sustained strength, sidelined investors may re-enter the market, increasing both demand and volatility. With mining shares still failing to reflect current metal prices and future earnings potential, he believes the repricing process is far from complete, suggesting that the most impactful moves may still be ahead rather than already behind. Now, we present the clips from Peter's interview. Before we continue, please subscribe to our channel and activate the bell icon to receive timely updates. Thank you, and enjoy the video.
At the rate we're going, 70 would be very realistic for this year. We're only $3.50 away from 70. But so for silver to go from 70 to 100, that's not even that big a gain. I mean, it's already up more than double this year. And so I think $100 is a very realistic target for silver in 2026. It could end up being, quite a bit north of 100. I doubt we get all the way up to 200, but that's, certainly it's in the realm of possibility, but I don't want to forecast that. But I'm comfortable with a forecast of 100. And I think gold will at least go to 5,000. Right now it's, 4,300. So 5,000 at a minimum. But I think, if silver's at 100, gold could easily be at 6,000, Surprised might not be the word. I mean, obviously I didn't know for a fact that it was going to happen. But it's not a shock to me that it is, because I did, as you pointed out, I did say that once we got above 50, which I thought was significant overhead resistance going back to 1980, that there'd be no more resistance and that would be just a big move up. And so I expected a big move. I would say that the move that we've had and the time frame that we've had it is more than I would have, guessed. But I'm not shocked that it's happening. I mean, what's really a bigger shock to me was that it took so long. Because for years I was, telling people buy silver. I can't understand why it's so cheap. Gold kept going up, and silver didn't go anywhere. And my main explanation was, well, it's the central banks, right? They don't buy silver, they buy gold. And so there really wasn't the buying. And so I don't know where the buying came from, to finally move silver. I don't think it was central banks. I think it was in private demand, but it finally showed up. I mean, people, I guess, looked at how cheap silver was and decided to buy it. But there wasn't that much of it for sale. That was part of the problem. So the price went up. And now that the price is going up, I think it's attracting more buying. In fact, gold has gone sideways. Gold hasn't made a new high in weeks, maybe a month. I forget when gold made its high. But silver just keeps going up and up, making new highs, making new highs, making new highs. And gold just goes sideways. But gold is going sideways, at 4,200, 4,300. That is a great price. And in fact, these gold and silver mining stocks, to me, even though, they've doubled, tripled, some quadrupled on the year, they're still very cheap. In fact, there aren't even any silver stocks that I look at that have made a new high today, even though you have this huge breakout new high in the price of silver. So, and gold stocks, are going sideways too. So we need to see another big move up in the miners. And it doesn't really matter what happens in gold and silver. The prices are already high enough that these stocks should be much higher. But every time there's a pullback, the investors get nervous and they dump these stocks without even paying attention to the fact that even if the metal pulls back, where they're pulling back to is still much higher than what's priced into these stocks. And the earnings that these companies are going to be reporting next year are just going to blow away what any analysts have forecast that they would earn. And so they're going to have to move a lot. Yeah, well, look, we know that the retail investor has been absent from this market for years. Not that there has been no retail participation, but that it's been minimal compared to, what it should be or what the retail investor, is doing instead. And one of the big distractions has been Bitcoin because of the way it's been marketed as digital gold, as an alternative to gold, as something that is superior to gold, that is gold only better, gold 2.0, given the way it's been marketed and given the relative returns. Because remember, when Bitcoin first came on the scene, that's when gold really peaked out. It started around 2011 when gold was at 1,900. The public didn't really start looking at it until 2017, and then more so, during the pandemic and 2000. But during that period of time, gold didn't go anywhere, just went sideways. But Bitcoin went way up. And so that was a very compelling argument to a lot of people where, hey, why are you buying, analog gold when you can buy digital gold? This is the new gold. And look, the new gold is up 10x. And your old-fashioned gold hasn't done anything. And so a lot of people that might have bought gold in 2019, 2020, 2021, 2022, 2024 even, bought Bitcoin instead.
Yeah.
Now, after a couple of years where, Bitcoin really hasn't gone anywhere and gold has doubled, more than doubled, and silver's more than doubled, I think a lot of people who made the switch out of gold or silver into Bitcoin are regretting that. Bitcoin is down more than 40% priced in gold. It's down, I haven't checked, it's well over 50% priced in silver since it's peaked.
Yeah.
And at one point, I think earlier in the year, Bitcoin actually had a higher market cap than silver. And that was probably right near the peak where you could have sold all your Bitcoin and bought silver. But I think that a lot of people who got frustrated and left gold or silver for Bitcoin are gonna come back. They're gonna go back to gold and silver. Now they're gonna take a hit. The whole debate was supposed to be Bitcoin versus tokenized gold. So a kilo bar of gold was not even relevant to what we were supposed to discuss. But yeah, if you're dealing in tokenized gold, it's just as easy to verify as Bitcoin because they work on the same principle where there's a blockchain. If you get tokenized gold delivered, then it's legit, right? You know immediately what it is. But as far as using physical gold as a medium of exchange, nobody is going to use just a kilo bar of gold. I mean, that gold's bar is worth over $100,000. I mean, how am I going to, buy stuff with that? Right. I mean, number one. So if I was going to use gold as a medium of exchange, I would be using coins, right? And, they would be much more easily recognizable to the naked eye. And, if they were minted by a mint that I knew of, and you could look at it and look at the ridges on the sides, and, you could drop it on the ground and, on the table and listen to the sound and compare it to the one you already have. And yeah, it's pretty much the same thing. You would be able to know. But nobody, is going to be handed a bar that, barely has any markings on it, that was kind of made by a private, mint, or not even a mint, whatever, fabricated, and it just has a weight on it. How would I know if it's legitimate? I mean, I'm sure it would have some gold in it, but I don't know if it has all the gold that it claims. I don't know, and especially when he's asking me like that, I'm thinking, what is it not? Is there something wrong here? He's trying to get me to say it's real gold and say, he's got some tungsten in it or something. I don't know. But the thing is, the Bitcoin community is so desperate to try to show that I lost the debate and that CZ won it, that's what they're going to play up. They're going to play that up as if it somehow invalidates gold and proves that Bitcoin is superior to gold, because I can't know for sure whether that big bar is actual gold or not. If we're using tokenized gold, well, then of course we know. And, but the main difference between tokenized gold and Bitcoin is tokenized gold is actually digital gold. It represents ownership of real gold. Bitcoin represents ownership of nothing. So when you validate Bitcoin, you validate nothing. When you validate tokenized gold, you validate something. So there's a huge difference there. But no matter what happened at that debate, right? The Bitcoin community was going to say that I lost.
Peter Schiff argues that the inflation narrative coming from political leadership is detached from everyday reality. He explains that inflation has nowhere to go but higher because the underlying drivers, soaring budget deficits, renewed rate cuts, and fresh rounds of monetary expansion, are all moving in the wrong direction at the same time. While selective prices like oil may appear lower, he stresses that this does not cancel out the broad rise in costs such as rent, insurance, healthcare, and services. In his view, official inflation data understates the real pressure on households, and dismissing these trends does not change the outcome. As monetary easing accelerates again, Schiff expects inflationary effects to intensify into 2026 rather than fade. Peter Schiff also outlines why this environment sets the stage for a powerful move in mining stocks, particularly smaller producers. He explains that major gold and silver companies are already generating extraordinary cash flow at current metal prices, making reserve replacement a strategic priority. Instead of costly exploration, he believes large firms will increasingly acquire smaller companies that already hold proven deposits but lack development capital. Even without buyouts, he expects capital to rotate down the sector as investors recognize how undervalued these stocks remain relative to metal prices. With margins historically wide and gold prices already elevated, Schiff sees the next phase as one where miners, especially juniors, catch up sharply, turning what was once considered a risky trade into one that appears increasingly obvious.
Inflation is going up. I mean, pretty much got no way to go but up. I mean, the budget deficits are big and getting bigger. The Fed is cutting rates and doing quantitative easing. So that's a toxic combination. I mean, that's how we got into this mess. So inflation is going to rear its head in a big way. I think that by the final year of the Trump term, inflation will probably be higher than it was in the first year of the Biden term. Biden set the high mark now at 9.1, but, almost all that inflation was the result of policies that happened under the Trump administration, not under the Biden. Biden, is responsible for inflation in 2022 or 2023, 2024, and some of the inflation we've had under Trump. But now pretty much a lot of Trump's policies are starting to kick in. And the Fed, of course, the Fed is the primary bad actor in all of this. And, the reason that inflation started to come down under Biden was the Fed was hiking rates and, it was doing quantitative tightening. So money supply shrunk somewhat. But credit kept expanding. That was a big problem. But they were pushing back a little bit. But now they've got the monetary spigots open again. We're doing rate cuts. We're doing QE. So you're going to start to see, some big impacts on inflation, certainly by the second half of 2026 from what the Fed is doing now. Probably the first half from, what's already been done. The only bright spot, I guess, in the inflation landscape is oil prices. And oil prices are low. I'm not disputing it, although they're not as low. Trump said $1.99 a gallon. I mean, I don't know anyone buying it at $1.99. But yeah, I mean, I'm looking at a barrel of oil now. It's $56 a barrel. That's cheap. And in fact, when you compare it to $4,300 gold, it's never been that cheap outside of a couple of weeks during COVID. So you're talking about really, really cheap oil. But that's just one price, right? There are plenty of other prices that have gone way up. And so on average, prices are going up. And in fact, not only did Donald Trump say that prices were going down, he said they were going substantially down. I mean, what's substantially? Because even if prices were going down 1 or 2%, I mean, that's not substantial. So what is he talking about? Is he claiming that prices are dropping 10% or something like that? Because they're not only are they not dropping, they're going up. But Trump is lying. That's it's ironic that he's lying on Truth Social, of all places, and he got mad at me for telling the truth. I told the truth on Fox and Friends, and then he had to lie about it on Truth Social by claiming that I'm a Trump hater. When, it's got nothing to do with how I feel about Trump. You don't have to hate Trump or like Trump, to know reality. The reality is prices are going up, whether I like Trump or not. That's reality. Trump's living in denial if he wants to claim that they're not. But then he's calling me a jerk. He's calling me a loser. I mean, why am I a loser? Why am I a jerk? Just because I disagree with the president, I'm a jerk and a loser? And they'll be able to get equity financing. They won't need to go to banks. They'll be able to go to investors who want more exposure to gold and silver, who will, buy equity in these companies and provide them with the cash they need to develop, the gold and silver deposits that they already own.
At this math, I mean, you talked about how they're, some of these majors are just printing cash at these margins. I mean, they're historic. If, we talked about this disconnect, if the business model is profitable, why the sector is still trading at such a discount to the S&P. But what's the street missing outside of that? And I guess more curiously, Peter, who do you think is going to come back to this market once they start? I mean, is it the old money, these dividends? There's a pretty good value here. Yeah,
there's tremendous value there. I mean, the companies are going to raise their dividends, and eventually just the dividend yield alone might attract investors. But a lot of it may be returned in share buybacks, right? Rather than just paying dividends, they'll just use their cash to buy back their own stock. And so that's also going to be compelling because Wall Street's going to see these huge stock buybacks, and they're going to want to own the stock as they know that those buybacks are going to result in higher stock prices just, in and of themselves. So you're going to see more money, especially, if the AI bubble has burst. And so money's coming out of the AI trade. The crypto bubble, I think, has clearly burst. So, where are they going to go, right? I mean, because there's always going to be what's hot, what's next, where can I make some quick money? Yeah. And so where's the hot money going to ultimately go next when it leaves AI and it leaves crypto? Mining stocks could be where they end up, and maybe the sector will get out of hand for a while. I mean, maybe we'll get to a point where I have to start considering selling some of what I own. I mean, we're not there yet because I don't think anything is expensive. But when you get a crowd involved, when you get real momentum and a lot of money coming in, things tend to get expensive. And then they get even more expensive, after that. But at some point, you could, take some money off the table. And, I would be looking forward to that because I've really never taken any money off the table in my mining portfolio. All I do is I keep adding to it.
I'm sure some CEOs would be excited. You're probably excited to hear that right now. Hey, I mean, listen, if you had to pick one asset class to outperform in 2026, would it be physical silver or junior miners?
Well, yeah. I mean, maybe the junior miners because they have a lot where they could go, especially junior silver miners, right? I guess those guys could really go. I also think the emerging markets could make a big move. Well, I don't know if they'll move as much as junior mining companies. But yeah, I think those stocks could have a much bigger year next year, triple, quadruple, almost like Bitcoin-ish type returns back from the early days of Bitcoin when Bitcoin was still going up. Not now when it's just grinding lower. And by the way, Bitcoin is grinding lower until it crashes, because that's what I think we're setting ourselves up for, is a big crash in Bitcoin, and maybe even led lower by strategy stock. That might be the catalyst that brings down the entire ecosystem. I mean, and it would be fair, I guess, because it was strategy buying that really powered the whole thing. I mean, Saylor has spent over $50 billion buying Bitcoin.
What comes next for silver on the road toward 100 is likely a shift from a fast breakout phase into a broader, more forceful repricing of value. After clearing long-standing resistance levels, silver no longer faces the same technical barriers that held it down for decades. That opens the door for sharp advances driven by momentum, capital rotation, and renewed confidence in tangible assets. As gold holds elevated levels, silver's tendency to compress years of underperformance into shorter bursts becomes more pronounced, setting the stage for rapid moves rather than a slow grind. The next leg higher is likely to be fueled by a widening gap between real inflation and official narratives. As households continue to feel rising costs in everyday essentials, confidence in paper returns erodes, pushing more investors toward assets that cannot be printed. Silver benefits uniquely in this environment because it straddles both monetary demand and industrial necessity. Tight physical supply, combined with rising usage across energy and technology, creates a scenario where even modest increases in investment demand can produce outsized price reactions. If you found this insight useful, make sure to like, share, and spread this update to others watching the silver story unfold. Your support helps keep these deep dive analyses coming.